Hey, we're trying to talk something positive. So while the sharp drop in the small and the mid-cap indices have hit some mutual fund schemes hard, remember we spoke about some of the 3 worst performing schemes, there are some that have weathered the storm better. Jayesh Khilnani has drawn up a list of the top 3 performers this year and their key holdings which has enabled them to do so. Now Jayesh, which are these funds, and is it because they had large cap holdings within their stable?
That's right, Neeraj. In fact, most of them have Nifty names as their top 5 holdings. Now, first and foremost, let's arrive at how we got the universe and how we have selected these funds. Is we have excluded the sector funds, the thematic funds, and of course the funds which are focusing out of India. So primarily these are India-focused equity funds. Let's have a look at the top 3 funds and how they have performed this year. So we have the UTI Blue Chip Flexi Cap Fund, which has given you the best performance, nearly 5% gains for that one this year, and the remaining 2 funds from the Axis Mutual Fund stable. So you have Axis Multi-Cap Fund, which has given you 4.7%, and Axis Equity Fund, which has given you in excess of 4% as well. Now let's have a look at the individual portfolios. Like you were mentioning, that these are all large cap names. In fact, all of the 5 stocks, the top holdings, belong to the Nifty 50 index as well. And the differentiating factor from what I could see is the IndusInd Bank and Yes Bank that they have in their portfolio. So individual stocks have given them about 7% to as much as 19.6%. Going on to the Axis Multi-Cap Fund, what you will see is which was absent in the UTI fund was Maruti Suzuki, which is has given you negative return of about 9.4%. We have HDFC Bank, Kotak Bank, Bajaj Finance, and TCS, which have a weightage of about 4% to 9% and have given you return anywhere between 10 to 30% on all of these stocks. Once again, the Axis Equity Fund, this also has Maruti Suzuki, which has given you negative return of 9.4%, but the other ones are common HDFC Twins, Kotak Bank, and Bajaj Finance. Once again, the weightage range ranges from about 5.5% to about 9.5%, and the individual stocks have given you about 10 to 30% as well on an individual stock basis. So essentially the large cap space has done much better, and that is reflected in the mutual fund performance as well.